Nobody seems to be noticing what is currently happening to natural gas, as those indicators right here are currently signaling a recession warning. And so to understand the latest price action here at natural gas in today's video, we discuss the most important technicals, fundamentals, and also macroeconomics of this commodity. We have recently seen that natural gas topped out here in the end of January, which actually marked the beginning of this massive sell-off that we've seen following. We are currently seeing natural gas retesting the lower band of this upwards channel here in blue. We've also seen that a volume delta has been coming back to neutral levels, as well as the RSI currently converging here. And so if you have a look at the hourly chart, you do see that falling wedge here, and obviously it would be quite important for a bullish reversal to the upside to see a breakout out of this falling wedge, and also this support at around $3 to actually be valid. We should obviously see that happen in the next few days, as we're currently retesting this support for some days already. But whether this is actually about to happen, whether we're actually about to see a bullish reversal from this lower band of this upward channel, that is a question that we can only answer by taking a look at the past cycles and the underlying drivers of this commodity. If you have a look at the weekly chart here, you do see that history is always repeating. We do have those cycles here at natural gas, and they always start at a certain period of time and they always end in a certain period and also in a certain way. If you have a look at the DXY, you do have an interesting correlation. Whenever we've seen those reversals to a strengthening dollar, in other words, we have seen a weakening dollar leading to a strengthening dollar, that most of the times coincided to natural gas top out. We've seen that happen here in the great financial crisis. We've seen that also happen here in 2011 and 2012. Also here in 2014, quite similar things occurred. And so you may have already guessed it, we do have this being a major indicator for whether or not we do see a long-term bullish or bearish trend at natural gas. And as we've seen the DXY drop significantly in the last few years, we are currently hitting this trend line here, this blue trend line, which historically marked a lot of bullish reversals at the DXY. And that would obviously suggest we might see the DXY strengthen again, and therefore we might see that the natural gas prices are currently topping out, and that we might already see the beginning of a deeper market correction here at natural gas. If you have a look at what is currently happening here to the copper to gold ratio, you do see quite similar things happening. You do have a negative correlation. In other words, whenever you do see that the natural gas price is actually still rising and the copper to gold ratio is falling, when this is diverging, when the copper to gold ratio is diverging relative to natural gas prices, that historically also marked a lot of bigger crashes at natural gas. As you've seen here, previous to the great financial crisis, we've also seen that happen here in 2011. And that just historically shows you that before those crises happen, we do tend to see this risk of metal, which is gold, actually strengthen against copper, which is more of industrial use. Now we've seen that happen several times here as well, and this really marked those bigger crashes or these bigger sell-offs that we've seen here at natural gas. And whenever you do see those divergences, those are really important signals concerning a market correction at natural gas. And in fact, we are currently seeing that happen again. We are seeing this long-term bearish trend at copper to gold, which obviously shows you the gold prices, which obviously surge when there is more use case for hedging against inflation and so on. You tend to see that the copper to gold ratio is actually weakening. Now let's have a look at the gold to S&P ratio, which is also of major significance to us at Chronos. Historically, whenever you do see that ratio obviously rise, as we've seen it happen several times, that is leading to massive crashes as well. Obviously, quite similar to those other ratios, because gold is just outperforming the S&P. That also tends to happen in times of economic uncertainty, and of times in times of economic distress, as we've seen it happen here in 27 and 28, leading into the great financial crisis as well. We've seen it happen several times before those sell-offs happened here at natural gas, and therefore those ratios, or this ratio especially, is really of use case predicting those crises. And we're also seeing that ratio rising for several years now. And so if you just combine those empirical evidences, it seems quite reasonable for us at Chronos to have this thesis of lower natural gas prices, which is our primary thesis. We want to make that very, very clear, because many institutions or YouTubers or investors that share advice do not really tell their actual thesis. And we definitely have a bearish thesis at this point. We do believe natural gas prices are about to go lower in 2026 for because of the reason that we do see liquidity actually turning backwards. We can also beautifully see that with the overnight repurchase agreements with the repo market. We've recently seen here on the 17th of February that the repo market again was used by the Fed, actually injecting about 18.5 trillion in liquidity into the markets, and so that is obviously showing you, billions, that this is really a really significant indicator, because you're currently seeing liquidity conditions actually getting tighter, and that obviously shows you we do have those problems in the repo market. We do have liquidity conditions getting tighter, and that is just the reason we at Chronos are quite concerned about what we're seeing happening here to natural gas. Obviously, in the short term, we can see spikes to the upside, as the DXY is obviously also changing trends all the time. And in fact, if you have a look at the DXY, you're currently seeing that we are in this reversal phase again. And if we obviously see that the DXY is actually rising above this upper trend line here, above this upper resistance, that would be a quite historical point here, since this would obviously signal we might see a continued upwards trend here with the DXY, which is also why we're quite so bullish on the natural gas prices. And so overall, we do believe in lower natural gas prices. There are obviously several ways this could play out. We could see that natural gas is having another pullback to the upside to some of those resistance levels here. But in the long run, we are about to see that natural gas prices are crashing lower, as we do see liquidity actually topped out. And also concerning the business cycle, we just believe it's time for natural gas to go into a deeper structural recession correction. At this point, the economy looks quite fragile as well. And concerning those empirical evidences that we've just actually assessed here, we do believe it's time for natural gas prices to eventually go lower. How exactly that is about to turn out is what we're about to discuss in the next few videos. So if you don't want to miss them, please make sure to subscribe to our channel and like the videos so you support us. And also, as we've said, don't miss those videos. Thanks for your support. See you the next time. Bye bye.